What's up, guys? Brad here. Welcome to my channel. Today I want to talk about the magic formula, Joel Greenblatt. And the question is, does the magic formula still work in 2020? Now, if you haven't heard of the magic formula, it's from this book here, The Little Book That Beats the Market. Joel Greenblatt was a hedge fund manager who generated, I think it was like 40% annual returns for 20 years as he was managing a fund. And he discovered this, he came up with this formula by plowing through a lot of data to figure out which metrics were the best to screen for, to find the best investments, to find the best stocks, the best companies to invest in. And what he discovered was that when you combine earnings yield, which is a measure of how cheap a company is, with return on invested capital, which is a measure of how good a company is, you get a screener that does really well, performs significantly better actually than the S&P 500 index. Greenblatt, he back tested this screening tool between years 1988 and 2009. And for companies that were over $50 million in market capitalization, and what that means is you basically multiply the number of shares outstanding for a company times the stock price, and you get the market capitalization or the market cap. So when you use this screening tool to pick companies that are the highest combination or the best combination of good and cheap, you can really outperform the market. It was nearly 24% annual returns between 1988 and 2009, as compared to, I think it was just shy of 10% for the S&P 500. But, we're in a different environment today. And so there's a lot of people wondering, does the magic formula still work in this environment? And, I watched a video recently with a guy who was trying to approximate the magic formula and using that criteria to see how it did in the last 10, 15 years. And the results weren't good. Obviously, he's not using the exact same formula that Joel Greenblatt is using with his magicformulainvesting.com screener. But, it got me thinking, like, okay, well, why wouldn't it still work? If there's something that's, what are some of the reasons that this magic formula wouldn't be working anymore like it used to be working? And there's a lot of comments in videos I was looking at that were saying, well, certainly you can't, why would you sell a stock when you're down on it? But that's not really the consideration here. If you're sticking to the formula, essentially you're buying a basket of stocks each year, or maybe buying into them quarterly. And then after a year of holding the stock, if it's no longer on that magic formula screener, you sell it. It doesn't matter if it's gone down or if it's gone up. It's kind of an automatic process, which is really smart. It's designed to remove decision making from humans, because when it comes to investing, humans tend to not be very good at making rational decisions. Okay, we tend to let emotion drive our decision making. So it's a really smart approach in that it's very mechanical. You buy if it's on the screener. A year later, you sell if it's no longer on the screener. End of story. There's no trying to time the market. Like, what's the market going to do tomorrow? There's none of that. And there are down years. There are years when the magic formula will lose money. But that is true in the stock market as well. That's not the point. The point isn't to make money every quarter, every year. The point is to do better than the S&P 500 index over several years. Ideally, the longer you leave your money in, the longer you let it compound, the more you're going to really take advantage of compound growth. So this isn't a 1, 2, 3 year strategy. This is a long-term, ideally 30, 50-year retirement approach kind of strategy. So it got me thinking, well, there's a lot of hedge fund managers. There's a lot of managers who have a lot of money to manage who are familiar with Greenblatt and with the Magic Formula. So, one possibility for why it may not be working as well as it used to is, hedge fund managers or fund managers use this screener to identify potential opportunities, potential companies to invest in. And they don't exactly follow the Magic Formula by buying 20 or 30 companies at once, the top 20 or 30 on the screener. They dig deeper into those companies because obviously, as powerful as these two metrics are when they're combined, earnings yield and return on invested capital, there's much more to a business than those two metrics. So for people who have the ability to analyze businesses and look at both the quantitative factors, the numbers, the balance sheet, the cash flow statement, things like that, they can also assess the qualitative factors of a company. What kind of track record does management have? How excited are the employees to work there? There are a lot of kind of soft metrics to evaluate that can't really be quantified. So it's possible that because this Magic Formula got so much attention, there's a lot of fund managers that are using it as a starting point to identify companies to dig deeper into. And really the way the formula works, you have 20 or 30 stocks at any one time in your portfolio, and there's going to be a few, probably no more than 5, that are going to really do well. And those companies that really do well are the ones that are going to really boost the returns on your portfolio, okay? So if you take away a couple of those companies that have really high returns, you're really left with a very average, mediocre performing portfolio. So it's possible that because there's so many managers looking at these baskets of stocks, at this basket of companies, they're able to cherry pick the top performers. And so, within days, those companies disappear from the screener because they've been discovered by these fund managers. The fund managers have been buying them up, so they're no longer cheap. So they disappear off the screener and you don't see them. So that's one kind of, I think, plausible reason why the Magic Formula may be underperforming. And I don't know if it's underperforming. Greenblatt hasn't published Magic Formula results since 2009. So it'd be nice if he would do that every couple of years, because in order to really follow this formula, follow this method, it's important that you believe in it. And one thing that I think that would really help people believe in it is if he was publishing the results. How well is this Magic Formula investing approach doing as compared to the S&P 500? So I hope he does that. Until then, we don't really know how it's performing unless you're implementing it in your own portfolio. Then you know exactly how well it's performing. And if anyone's doing that, please leave a comment. Let us know how well this approach has been working for you, ideally over the last 5 or 10 years. That's all I got, guys. Hit the thumbs up if you enjoyed this. Hit the subscribe button if you want to see more financial education videos like this, more investing videos. And I will see you guys next time. Take care.